Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Shares at Costco, they were higher in the after hours. Now they're down just fractionally. The company posted better than expected earnings in the quarter, a sign that the nation's largest club chain is flexing its scale and devoted following to navigate tariffs and other forces of economic turbulence. Devoted followers. There's like Reddits dedicated to... You know, my sister had a Costco-themed birthday party, Carol?
That's kind of funny.
Like,
I don't even know how you do that.
She
what do you
loves
do?
Costco.
Yeah. Stock's up 10% this year. As you said, though, little change here in the aftermarket. Gap also out posting better than expected quarterly results driven by strong performances from Old Navy and Gap brands. But as Tim mentioned, this stock is plummeting in the aftermarket. It's down about 15%. The outlook from the company sees second quarter net sales about flat year over year, sees fiscal year net tariff impact up to $150 million in operating income, and still seeing fiscal year net sales of about 1% to 2%. But the outlook, they say, does not reflect potential tariff impact. So I guess it could be worse than expected. Burt Flickinger is managing director for the retail consulting firm Strategic Resource Group. He joins us from New York. Burt, so great to be talking with you. It's been a while, a long time. Let's talk about Costco, first of all. What do you make of their results? Stock, as we said, bouncing around in the aftermarket. And right now I'm looking at, it's pretty much flat.
Carol and Tim, two things. As you referenced, Costco's hitting on all cylinders, doing well. Every country, every continent, every market. But what's particularly impressive on top of their 5.7 comparable sales and 8.8% revenue growth is they have the whole world to conquer. They've got twice as many stores in Taiwan, 14, as they have in the People's Republic of China. And it's the same analyses we did for the acquisition of Tiffany, where Costco, like Tiffany, is really understored in the major markets. And Costco's wiping the floor with Sam's Club, as it always has for 40 plus years. And Costco's benefiting from bankruptcies, has great leadership, great prices. And we're writing a book, The Explosive Growth of Private Label Eclipsing National Brands. And Costco has the best private label business anywhere in the world.
Kirkland Signature, I believe, is what it's called, Burt. Why has Costco been able to do so much better than Sam's Club? Or maybe a better question is, why can't Sam's do what Costco has done?
The big reason, Tim, and it's a great point you brought up, and I love your sister having a Costco-themed birthday party, too. Very impressive. Sam Walton was never really that successful with his brother Bud. They failed in Bud's closeout stores. They failed in Dot's discount drugstores. They stole all their good ideas, including from Price Costco, and promised never to compete with Solid Bob Price and Jim Senegal, and they lied and they did. And they did the same thing with the Davis family with Winn-Dixie on the board, said they never go into the food retail, did. Same thing with John Schwegman and Schwegman's. So Walmart's a copycat, but since they're not real operators and practitioners, they don't know the detail of retail and the rhythm of retail. So why is that important? Costco does $250 million in sales per store. And Tim, and for your sister and Carol, and for all your great Bloomberg listeners and viewers worldwide, the average Costco is the equivalent of 25 Albertsons stores, and 70% of what Costco sells is consumable food. So whether it's your sister or whomever worldwide, she or he could get everything one needs, from hard goods, soft goods, consumer electronics, general merch, pharmacy, to the cheap hot dogs in the lobby, to food, and not have to go anywhere else. So Costco is replacing shopping malls and shopping centers and the Roman empires of retail worldwide, because Costco's a shopping center unto itself and raising the standards of living when 70% of consumers are living paycheck to paycheck, and Costco's prices are 20 to 30% below anybody else, with the exception of Aldi, Trader Joe's, and a couple others like Winco.
Kind of love that. And just in terms of, we're all about size and scope, or that. And so you really put it into perspective. What, Tim?
I asked the question, he gave the answer. That is the answer. I love it.
No, it says so much. I mean, the one thing I'm curious about, Burt, when it comes to Costco, we used to say, okay, it's kind of a higher end customer. Is that still the case?
Still the case. And what's interesting, Carol, and to your and Tim's present questions on Walmart, Walmart's grown through acquisitions and failed in 10 foreign countries, from Japan, Korea, Brazil, Argentina, throughout Asia, throughout sub-Saharan Africa, throughout Europe. And Costco has not grown through acquisitions. So the Socratic question we have to ask ourselves, Tim and Carol, is what can Walmart do? What can Costco do to grow through acquisitions? They can buy Metro, which is the fourth largest retail, all wholesale clubs worldwide. Full disclosure, bought SM Flickinger company. And Metro with Costco would pole vault Costco and Metro to the biggest retailer anywhere in the world. And our client Pack and Save in NZ or New Zealand, Costco only has one store. Pack and Save is translatable to throughout the Asia Pac region and other regions. So Costco buys potentially Pack and Save, or more certainly Metro, and you have a worldwide powerhouse. And think Walmart's in trouble now with Sam's Club and Walmart. Walmart's in total trouble if Costco makes any acquisition.
But Walmart, I'm going to ask a long question, Burt, so we can work on your connection a little bit. It was breaking up just at the end. I do want to specifically talk about Walmart, because last week what we were saying is basically, hey, they're in a much better position than Target is in, because more than 50% of what they offer are consumables. So they're not discretionary. Whereas Target,
food?
Yeah, I'm talking about food. So where I'm talking, Target, that's a lot of discretionary spend. And Target has its own set of issues that we talked about last week. But Walmart is able to rely on groceries to help sort of, I guess, blunt the effect of maybe a weakening consumer and some of the tariff issues that it's facing. I thought Walmart was in a pretty good position, Burt.
Tim and Carol, you're completely correct. But Walmart wins in North America and loses worldwide. And that's going to change. And Walmart on the consumable side, yes, they're doing well. Target is not a Brian Cornell leadership issue. It traces to the problems passed along by John Stumpf, the lead independent director of the board, Greg Steinhoffel, and Bob Ulrich, for failing to invest CapEx in Target food distribution centers. So Walmart has 130 food distribution centers. Target has less than 10. Kroger and Albertsons combined had 60. Kroger basically 40. So Target, with no food distribution centers to distribute food, has to go to an outside wholesaler, which lowers quality, raises prices. Brian Cornell's working decisively to take corrective action on that. So Target, while it's trading at a 10 PE on the Bloomberg terminal, Target can have a real retail requiem. Walmart has had a retail renaissance in North America, but it's like Charles Dickens wrote in Tale of Two Cities. It's the best of times and it's the worst of times, Tim and Carol.
Yeah.
And it's the best of times for Walmart in North America, and it's the worst of times for Walmart internationally. For Costco, it's the best of times everywhere worldwide.
Love it, love it. Hey, one thing I want to ask you, not such a great time for the Gap. It's down 18%, Burt, here in the aftermarket. And this is after the company came out, reported weakness at its Banana Republic brands, its Athleta brands. They did rise at Old Navy and Gap. Revenue of $3.5 billion in the fiscal first quarter. And the company's saying it's working to reestablish Banana Republic and reset Athleta with efforts to improve product and marketing, which will take some time. Where is Gap? Where does it need to be? What role could it have, should it have in the retail world?
Carol, Gap's a rudderless retailer, and here's why. Horrible executive search. So you take executive leaders who have failed with other companies, and after they've failed elsewhere, you bring them into Gap to incorporate it to fail more. And I was offered the head of executive search for one of the leading executive search firms in the world for retail, consumer, and distribution. And I was told, Flickinger, you'd go spend months finding the best person. Yes. You don't do that. You just take whomever's available. Well, whomever's available are the people who got fired for failing. It said, well, if you do that, you'll get killed by all the other competitive search firms. They said, who do you think we learned it for? You just take people who failed and replace them. That's the story of Gap, Tim and Carol.
But
it's poor leadership, where Costco is homegrown.
Wait, I just want to.
Leaders.
But when Gap, I think, hired Richard Dixon, who was formerly of Mattel, who was seen as reviving, I think, the Barbie brand, I think it was seen as a good hire. So you're saying not a good hire?
Not a good hire because it's like taking Sandy Douglas from Coca-Cola and putting him into UNFI Super Value. You have somebody who's managed a few hundred SKUs or selling units, and you give that person selling tens of thousands of units.
Yeah.
It can't compute. And these search firm people, Carol and Tim, they have no experience as operators, no experience as practitioners, no experience as leaders,
right.
No experience as big complex business developers, especially worldwide, especially across a depth and range of brands that require understanding the rhythm of retail and the depth and detail of retail as well.
Can I get you 25 seconds on Ulta, which is soaring in the aftermarket? The stock is right now up about 8%. This is following earnings and beauty demand bucking the consumer pullback at 25 seconds.
A powerhouse and continues to be a powerhouse. Great leadership, great quality, great consumer cachet, great marketing, and great consumer communication. Outstanding company.
All right. So fun to check in with you. Covered a lot of ground in the retail space and all that earnings after the closing bell. Burt Flickinger, looking forward to next time already. He is managing director for the retail consulting firm Strategic Resource Group. As you see, a lot of size and scope and perspective when it comes to the retail environment. He's seen a lot of cycles.